What's up, crypto fiends? Average crypto investor, aka trying to pay my fair share, here to talk about my recent meeting I had with a CPA and crypto taxes in the United States. As always, nothing said in this video is financial advice, and you should always do your own research. The tax situation with crypto is ever changing, and you should consult a tax professional in your own jurisdiction before making any concrete plans. First, let's talk about how crypto is taxed. Under current IRS guidance, crypto is considered property for tax purposes and receives the same tax treatment as any other asset in this class, like stocks or commodities. This is the simplest way to understand everything else in regards to crypto taxation and how you can plan accordingly. Second, crypto is subject to capital gains at the time it is sold, traded, or used to purchase goods or services. That means if you exchange your Bitcoin for Ethereum, the difference between your Bitcoin at the time you received it and the time you exchange it for Ethereum will be subject to capital gains. Once you receive that Ethereum, that will be your cost basis for any future transactions with that Ethereum as well. This is why it's important to keep detailed notes if you're frequently using DEXs to exchange cryptocurrency, because it can be a real pain to use a blockchain explorer after the fact to find each transaction. It's also important to note here that even if you use cryptocurrency to purchase a good or service, it will still be subjected to capital gains for the time period in which you held it. Let's give an example of what the IRS wants to see. Let's say we buy one Ethereum for $2,100 at the start of the year. Then about a month later, we decide we want to buy 4 strong tokens for $500 each. This would give us a capital loss of $100 for our Ethereum and a cost basis of $500 for each strong token, assuming they were equal at that time. Then we decide we want to go back to Ethereum because the price dropped and our strong tokens increased. We sell our 4 strong tokens for $750 each and buy back in Ethereum for $1,900. This gives us a capital gain of $1,000 and a new cost basis of $1,900 for Ethereum. Our net capital gains for these two trades would be a $900 capital gain. One of the biggest questions that people have around crypto taxes is the use of businesses to shield income. I know it was one of my biggest questions as well. If you would like to hear how I plan to build a cryptocurrency-oriented business in 2022, make sure you subscribe with the bell notification turned on so that way you can be the first to hear about my journey. I brought this question up to my CPA, and his answer was really that it depends on exactly what you're doing. If you are either a buy and hold investor or primarily staking your cryptocurrency, then it would be better to keep everything on a personal return, according to him. This is because it would be considered passive income and not subject to self-employment taxes. You will still need to pay the taxman for your capital gains or staking income, but you won't need to then pay self-employment taxes on top of that. But what if you're a more active trader? We have seen gas prices skyrocket on the Ethereum network, and many DeFi protocols have started tacking on claim taxes or sell taxes to drive extra revenue. Is there a way that we can offset our earnings with these associated costs? This is where a business may be beneficial. The CPA that I talked to discussed the idea of opening an SCorps with a mark-to-market election. He works with several day traders, and he said this is usually the approach that they tend to do. But what are the benefits and the potential drawbacks of operating in this manner? First off, operating as an SCorps would give the benefit of drawing a quote-unquote reasonable salary. This is beneficial for myself because I may be looking to buy a home in the future and I would need that income on my personal tax return to do so. The salary would be subject to normal self-employment taxes, which would be more than if you're working a normal job as an employee. The benefit of the SCorps in particular lies in the fact that we can then do distributions on a regular basis to myself with other profits from the business. These distributions would not be subject to self-employment taxes, but would be taxed on capital gain rates for the individual. This allows me the freedom to take more income when the crypto market is up and just take my normal salary when the market is down. Having a business also offers me some other benefits, such as hiring people to offset my income, being able to get benefits for myself and use as an expense, or even writing off other business expenses. However, this isn't the full benefit of the mark-to-market designation. Mark-to-market is a tax designation that is mostly used by day traders and those that run security-based businesses. The CPA that I talked to thinks it can also be used for someone who primarily makes their income through trading cryptocurrency as well, since it falls under property tax rules. This changes investment income into ordinary income. This is helpful because you can only use $3,000 of capital losses as a deduction, but changing it to ordinary income allows you to write off as much in losses as you have for that year. He believes that this would be the way that I could also write off expenses such as exchange fees, claim taxes, taxes by staking platforms, and gas fees. This can add up significantly over the course of a year and really minimize tax liability. Overall, crypto tax is only as complicated as you want it to be. The IRS has been clear that they are treating cryptocurrency as property and the related tax rules are applicable. There are other countries that treat cryptocurrency more favorably, most notably Portugal and Switzerland. Overall, I think as there is more mainstream adoption of cryptocurrency outside of Bitcoin, we will have clearer guidelines and more solutions for those involved to minimize their taxes. Do you have a tax plan in place for your crypto? Did you set it up or have you worked with an accountant or CPA? Leave a comment below letting me know. As always, make sure you're subscribed with the bell notification turned on so you can be alerted when my next video goes live, and make sure to leave a like to help others see this video. That's all for now, stay safe, and don't worry crypto fiends, we are all going to make it.